Stock's a little stuck in the mud today. Let's get to our calls of the day. That one right there, Block. Why do we do that? It was double downgraded to underperform at CLSA. It gives us an opportunity to talk about fintech like PayPal, which had its earnings. Let's show PayPal today. New 52-week low. That was before the open. Lowest level since September of 17. Stock's getting a rebound, though. You own PayPal. Yep. What's your takeaway here?
So the call, if you just listened to the call and didn't look at the stock price, it was not a bad call. They had $1 billion free cash flow. They're still going to have, they estimate $5 billion free cash flow for the year. They're growing up until we're still looking for a successor for Dan. And it's like, that's till the end of the year. So you have a company with a market cap of what, 65, 70 billion, that to me is stuck in the mud, because you cannot have a company this size in a competitive market with no CEO, because that doesn't make any sense. And so I thought it was just almost unacceptable that they're not further along in announcing that. And that's like a Disney issue. You have to have a long-term successor. And so for me, PayPal's on my chopping block right now, because this is not a company that's acting like they need to be in the pole position of the fintech space right now.
You know, it's funny that Gordon Haskett, the firm, they're pretty critical of, to your point, what's happening or what's not happening. They say PayPal's lame duck is now limping around with a lame stock. And they wonder, right, you have an activist there, Elliott. They wonder whether Elliott's exit stage left, or at least 1 foot out the door, when the stock had a nice move last year. Also wondering, when are they going to figure out who the successor to Dan Schulman's going to be?
So you would think with Elliott coming in, who has such a long history, Elliott's been there for a while, that they would have already been discussing who was going to take over as a succession plan. So to me, I think that's a great analogy of a lame duck. And just like a lame duck presidency, nothing happens. And I think this will continue to be an elephant on the chest of PayPal investors this year until that happens. In the meantime, there's other good companies that are executing. So I think it's a tougher stock to own.
You thinking about selling it? You thinking about selling it?
Yep.
What about you, Jason Snipe? You own it too?
Yeah, no, it was, to Bryn's point, I mean, not a bad quarter, right? Beat on revenue, beat on EPS. But I think for me, they talked about the operational margins contraction. I think that played into kind of the view of the stock. The price action hasn't been great. You know, the other thing is it's a competitive environment. You got Apple Pay, that's the big brother, and I think that could really have a material impact on what they're trying to do.
Why do you own it? Why do you own it? Let's just cut to the chase.
Yeah, cutting to the chase.
Right, because the numbers, these are some sorry numbers.
Yep.
Down 13%, the stock is over a month. 20.5% 3 months. 29.5% 6 months. 38% off its 52-week high.
Yeah.
Simple question, right?
Yeah,
of all the concerns that you're laying out, why do you own it?
100%. So I think for me, I think Bryn makes a point on Elliott. You know, I really like Elliott. I think they have, to her point, they have a great track record. It is concerning that they're quiet, that they've been quiet. They announced 7% layoffs, and, you know, I thought that would be accretive to the balance sheet, but it hasn't played out exactly the way I would think. So it's under review as well for us.
Roblox got a couple of upgrades today. Bryn, still on Roblox,
Yeah,
right?
I do. So this is a good, I think this earnings quarter is good for investors to remember. They came out with earnings and they missed. It was like they lost 44 cents versus estimates were 40. The stock before the market opened was down about 2 or 3%. Then all of a sudden the conference call starts. So investors pay attention to those conference calls. Dave Baszucki came in right off the bat and talked about they did $100 million in cash flow from operations. Bookings, which is a really important number, is back to double digits. They did 20%. And he just did such a great job about talking about the platform of Roblox, the stickiness. And in Japan, they grew 100% year over year. And so I think this is I like this company. It is not for somebody that wants earnings, free cash flow yield today, but I like the gaming space, and I think they continue to execute in a hyper competitive market.